Every business owner I meet wants the same thing, generational wealth. But here's the thing, you can hit multi-6 or 7 figures in personal income and still own a business worth zero to anyone but you. There's hundreds of tax traps and structural mistakes that can leave a successful looking business owner broke. So in this video, I'll walk you through a 4-step system to turn a business that owns you into a business you can sell or scale to 8 figures. And after working with hundreds of businesses as their CPA and tax strategists, I'll cover the one single number that 99% of them get wrong. Step 1. Owner's pay is not net income. Here's what I see all the time. Most people just see their net income as their owner's pay, or they think owner's pay only matters because they have to set a reasonable salary for their S-Corp taxes. That's the wrong frame. And it's why so many owners walk around thinking their business is profitable when it really isn't. Owner's pay is not the money left over at the end of the year. Owner's pay is the fair market cost of the services you personally provide to your business. Two completely different numbers. When you separate them, you get 2 clear questions instead of one confused one. Question 1, what does my business earn as an operation? Question 2, what am I worth as an operator? Most owners smash those together and call the total how much I make. And that's exactly why they end up building a job instead of a business. Understanding and mastering owner's pay is the starting point to building a sellable business that creates generational wealth. Miss this, and you're running a business that's really a job where you're your own tyrannical boss. Get this right, and you unlock everything. But here's where it gets uncomfortable. Step 2, key man risk, the concept that kills most business sales. If you ever want to sell your business for real money, the acquirer has to replace your services inside the business. That's a massive cost line to consider, given how much work you probably do. It might be 2 or more full-time salaries because it's hard to find employees who can do everything you do. This is called key man risk. Key man risk is the discount a buyer applies to your business because the operation depends too heavily on you. Solve for it and you multiply the value of your business. Ignore it and your business is worth exactly what you're worth to keep working in it, which is basically nothing to a buyer. Because if your business can't operate without you, how will you ever sell it? Or take a month-long vacation without it costing you that month's income? There's 2 simple tests to know if you're the key man in your business. Test 1, can you take a full month off without revenue dipping? Test 2, would a buyer be paying for the operation? Paying for you. If you flunk either test, your business isn't unsellable forever, it just isn't sellable yet. And that's the entire game, turning yourself from the operator the business needs into the leader the business benefits from. Here's the hard truth that will change everything. If you make $200K, but you put in $250,000 worth of personal services, your business is unprofitable. If a potential buyer had to replace you in that business, they wouldn't make any money from acquiring you. They're just taking on a new job with extra steps. Now, how do you actually measure the fiscal impact of being the key man? You calculate your replacement salary, which brings me to step 3. I know I'm going through a lot of this quickly, but there are a lot of tax traps you have to be aware of, especially if you're building a business you want to sell someday. So I put together the 5 that I see most people usually fall into. If you click the first link in the description below, I'll send that list directly over to you. It's crazy the difference these make. Once you become aware of these, you will not forget them, and this could save you thousands and thousands of dollars each year, so go check it out. First link in the description, entirely free. Now, back to calculating your real owner's pay. Step 3, calculate your true replacement salary. Here's the exercise that changed everything for me, and it's the exercise I run with every client we take on. Ask yourself, how much would it actually cost to replace me? For most owners doing multi-6 or 7 figures, that number is 2 or more full-time salary. Because you're not just the CEO. You're also the head of sales, head of operations, sometimes a top producer, the finance lead, the hiring manager, and the person clients want to talk to when something goes wrong. Be honest with the count. Then price each role at fair market rate. Not a lowball, actual market. You can't expect someone to come into your business and be as productive as you unless you pay them very well. Or unless you're just not that good. And here's an important nuance. For tax purposes, paying yourself $60K a year in S-Corp owner's comp may make sense. Saves on payroll taxes, and done right is within a reasonable comp range for a lot of situations. That's a legitimate tax planning move. But for business analysis, it's not realistic. Not if you're making multi-6 or 7 figures income and working 60 hours a week. What's reasonable for the IRS and what's honest for your enterprise value are 2 different conversations. Do not confuse the 2. Here's what this looked like in my own firm. And it's honestly not a story I'm proud of, but I'm man enough to admit it. One year I ended up making $200K for my CPA firm. I worked my ass off that. When my new fractional CFO asked me how much my owner's pay should be, I told him I paid myself $60K in S-Corp owner's comp. But he urged me to determine how much it would really cost to replace all that I do in the business. Sales, ops, delivery, hiring, client relationships, finance, like all of it. So much. I was working so much that year. I ran the numbers. I provided at least $250,000 of pure value and services to the firm. He looked at me and said, so your business didn't really make much money last year. That realization hit me like a ton of bricks. I have employees. I made $200K. What do you mean I didn't make any money? My CPA firm was literally unprofitable. Once you see the number, you can't unsee it, which forces the question in step 4. Step 4, fix the gap, document, delegate, elevate. Once you've calculated your true owner's pay and stacked it against your net income, one of 3 things is true. Either your business is genuinely profitable, and you should be proud. congratulations, you have a real business. Or revenue is too low for the cost structure and you need to raise prices, cut costs, or both. Or, and this is where most business owners land, the business only works because you're doing the work of 2 or 3 people for free. And the fix is not to grind harder. The fix is to stop being the person doing the work. The fix is to correct your business model and to stop being the person doing the work. 3 moves. Move 1, document everything you do. Every task, every process, every judgment call you make in a week. If it lives in your head, it can't be sold. Get it on paper. Move 2, delegate against measurable KPIs, not vibes, not what you think should be happening. Specific numbers there. Hire people to own specific outcomes, not help me out. Specific numbers they're accountable to. Otherwise, you just added payroll and kept all the responsibility yourself. Move 3, run the business from the top, not from the middle. Dashboards, reporting cadences, weekly accountability meetings. Your job becomes assigning responsibility, deciding on objective KPI goals, and holding your team accountable to hit them, not doing the work yourself. We dove deeper into my own numbers after that fractional CFO conversation. My labor costs were high. My software costs over 6 figures a year. My revenue was way too low to be spending that much money. And I was making up the gap with pure hustle and grit without even realizing it. As honorable as I want to feel about those character traits, it made me feel like an idiot. Owning my business was 10 times the complexity and stress to make the same income as a solid job. That's the tipping point where I started to become a true business owner. I decided I don't want to live like this forever, sacrificing my time and relationships for a decent income in a business that would die the moment I stopped working. It was time for my people and my processes to make money. All of my time since has gone into developing processes, training, and providing accountability to my people. My job is now to not have a job. Am I all the way there yet? Absolutely not. I still manage some client relationships. I still have finance tasks, sales and marketing, hiring, team management. Still, honestly, way too many responsibilities. But all of those tasks are now being performed with the awareness that my job is to document and delegate everything, to assign responsibilities, create measurement mechanisms, decide on objective KPI goals, and provide accountability to my team to hit those goals. It's a long process. By running the firm from the top, I can see what's happening across the company and allow my team to create the process. I can elevate myself from the day-to-day. I can make strategic decisions to scale to 8 figures and beyond. I can free up my time, and I can lead my firm to create the generational wealth and freedom that lets me have a real relationship, enjoy time with my family, and give back to my community in ways I simply couldn't while I was running my business blind and unprofitably. So now you understand that generational wealth doesn't come from grinding harder inside your business. It comes from building a business that doesn't need you inside of it. So here's what I'd tell you if you were sitting across from me right now. This week, sit down, write down every task you do inside your business, price each one at fair market value, add that up, then subtract that number from your net income. Whatever is left is your business's real profit. That number tells you whether you're building generational wealth or building a job with extra steps. And if that number's negative, you're not broken, you're honestly in the same place I was. And it's the exact moment to start becoming a true business owner instead of a self-employed hustler. So if you want help running that analysis and building the structure to elevate out of the day-to-day, book a call. Links in the description. Let's talk about where you're at on your road to entrepreneurial freedom.